Have you ever stopped to think about what money really is? And is the stuff we use every day really the best we can do? We're going to dive into Saifedean Ammous' book, The Bitcoin Standard. And it makes a pretty wild argument that the entire history of humanity has been a search for one specific thing in our money, a quality he says we've just rediscovered in a totally new digital form. So let's see what he's talking about.
Okay, so to really get what this book is all about, we've got to start with its central question. What makes money sound? And it's not about what a government says or if it's shiny. According to the author, the answer is way more basic than that.
And here it is, the big idea. Sound money, or hard money, is just money that's difficult to make more of. That's it. The way you measure this is with something called the stock-to-flow ratio. You just look at how much already exists, that's the stock, and compare it to how much new stuff is made each year, that's the flow. The higher that ratio, the harder the money, and the better it holds its value. This one single concept is the lens the book uses to look at the entire history of money.
So with that definition in our back pocket, the author takes us on this incredible trip through history, framing the whole thing as this constant global competition to find the soundest money possible, the best way to store value over time.
You know, it started with things that were hard to find, like specific seashells or even giant stone wheels on the island of Yap. But time after time, as soon as it became easy to make more of them, like when Europeans just showed up with boats full of glass beads, they completely failed as money. The Romans learned this the hard way. Their emperors started shaving off bits of their gold and silver coins, making the money worth less and less, which helped lead to the empire's collapse. After centuries of trying everything, the world eventually landed on gold.
The book holds up the period from 1870 to 1914, the era of the classical gold standard, as a kind of golden age. The argument, which leans on economists like Ludwig von Mises, is that this wasn't just about economics. Having a hard, monetary standard actually limited what governments could do, which in turn fueled a massive boom in global trade, technology, and individual freedom.
But, of course, that golden age came to a screeching halt. And this is where the book really shifts gears to focus on its main target, the monetary system we all live under today, which is government-issued fiat currency. So how do we get here? The book points to a single critical moment, World War I. Funding a war that massive was just too expensive to pay for with taxes. So governments came up with a new plan. They cut the link to gold and just started the printing presses. The author argues that this was the moment everything changed, unleashing what he calls easy money on the world.
And check this out. The author draws a really chilling connection here. He argues that easy money makes endless war possible. When wars had to be paid for with gold, they usually ended when the money ran out. But in the 20th century, the century of the money printer, the scale of conflict just exploded. I mean, the data on this slide makes that point in a pretty stark way.
And it's not just war, it's the total instability of the money itself. We're talking about hyperinflation, where money becomes worthless almost overnight, destroying entire societies. And the book drops this absolute bombshell of a statistic. Of the 57 times this has happened in recorded history, all but one, 56 of them, happened in the age of government-controlled money.
But the book's critique goes even deeper, right into our culture. The author talks about this concept called time preference, basically how much we value the future compared to today. The argument is that sound money, money that holds its value, encourages you to save and think long-term. That's how you get incredible achievements like the Sistine Chapel. But easy money, money that's always losing value, pushes you to spend now, to go into debt, and it creates this culture of, I want it now.
And this isn't just some abstract theory. You can see it in the data. Right around the time the world fully abandoned the gold standard in the early 70s, the reason to save just collapsed. As the book shows, savings rates in the biggest economies just fell off a cliff. And it kind of makes sense, right? Why would you bother saving money that you know is going to be worth less tomorrow?
So after laying out this pretty grim picture of the current system, the book finally pivots. It moves from the problem to a potential solution. And it's a solution that didn't come from politics or governments, but from technology.
Back in 2008, this mysterious person or group called Satoshi Nakamoto published a paper with this incredibly simple title. The goal was to create a way for people to send money directly to each other online, with no bank, no government, no company in the middle.
So how does that even work? Well, just think of it like a giant public spreadsheet that's shared all over the world. When you send Bitcoin, your transaction gets broadcast to this huge network. Then, powerful computers called miners
all race to be the first to verify it and add it to the permanent record, the blockchain. And once it's in there, it's locked in forever. It's a way to get a final payment without needing a central authority.
But this right here is the killer feature. This is what the book argues makes Bitcoin a real contender for sound money. Unlike our current currencies, which can be printed into infinity, Bitcoin's supply is permanently capped at 21 million. That number is written in the code, it can't be changed. This creates something that has literally never existed before. Provable, absolute digital scarcity. This chart really puts that scarcity into perspective. For centuries, gold was the hardest money because its new supply only grew by about 1.5% a year. It was just really hard to find more. But Bitcoin's new supply gets cut in half on a predictable schedule, about every 4 years. According to the author's projections, by 2025, its inflation rate will actually drop below gold's, and it'll just keep getting closer and closer to zero.
Now, obviously, Bitcoin is not without its critics. I mean, it's super controversial. But the book doesn't shy away from that. It takes on some of the biggest criticisms head-on. Let's look at a couple of them. All right, first up, the elephant in the room, energy. We hear it all the time. Bitcoin mining uses a ton of power. Is it just a catastrophic waste of energy?
Well, the book's argument completely flips that on its head. It says the energy consumption isn't a bug, it's a feature. All that energy is what secures the network. It's like a digital wall that makes it incredibly expensive and difficult for anyone to attack or change the history. It's simply the price you pay for a monetary system that doesn't need banks or governments. And as the author points out, it's not like the traditional financial system runs on zero energy itself.
Okay, what about the other big one? Especially from the early days. Isn't Bitcoin just for criminals? For buying illegal stuff online on places like the Silk Road? The author points to a fascinating moment in time to argue against this. In 2013, when the FBI finally shut down the Silk Road, a lot of people thought, okay, this is it. Bitcoin is done. And sure enough, the price dipped for a bit. But then, within 2 months, it absolutely exploded to a new all-time high. The book argues that this was the market sending a clear signal. Bitcoin's use case was way, way bigger than just crime.
So, if we pull all of this together, what's the end game? What happens if a sound digital money like this actually goes mainstream? Well, the book suggests the impact wouldn't just be big, it would be revolutionary. The author highlights this quote from a book written way back in 1997, and it is shockingly predictive. It basically said that new technology would shift power away from big governments and toward individuals. The argument in The Bitcoin Standard is that Bitcoin is the last crucial piece of that puzzle. It's the money piece, a technology that lets anyone in the world store and send value without asking for permission from any government. And that leaves us with the huge, central question that the Bitcoin Standard really puts on the table. Is this whole idea of going back to a hard money standard just a step backward into the past? Or could it be that in our digital world, a new kind of sound money, one enforced by technology, is actually the foundation for a more free and prosperous future? It's a massive debate, and it's really just getting started.